Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 22nd of January. I'm Daniel Lam, your host for the podcast. Recently, I started going out for quick lunches instead of eating at my desk. It clears my head and gives me time to think. In finance, we've had so much geopolitics this year in the US, Europe, and also in Japan that it is worth taking a step back, think, look at the bigger picture, and to see what is under the radar at this moment in time. And today, we're going to focus upon India, a market that we're bullish on, not so much in the limelight as the aforementioned markets over the last few weeks. Not yet, I should say, because India's finance minister is going to present the union budget on the 1st of February. The global backdrop is murky, given prevalent geopolitical tensions and the low visibility on the US-India trade deal. Domestic activities may become softer due to the fading impact of counter-cyclical measures as the government's capex to GDP ratio peaked. We're expecting fiscal consolidation to continue, but at a slower pace. We expect the central government to target a FY27 fiscal deficit of 4.2% of GDP, while sticking to the FY26 target at 4.4%. There will be unlocking of GST revenues, which should allow consolidation without compromising on capex. Goods and services tax revenues, worth around 30 basis points of GDP, have been earmarked for repayment of bonds issued during COVID to meet states' GST shortfall. With the repayment to be completed or fully provisioned in FY26, this revenue will be available for central and state government spending. Finally, we expect to see policies to focus upon simplification of regulations and structural reforms to attract more investment. Because the room for further consumption stimulus in FY27 seems to be limited, in our view, after income tax and GST cuts in FY26. The reform push, including the labor code notification, has picked up recently as an uncertain global outlook increases the urgency to leverage upon domestic demand. With bullish Indian equities this year, we believe earnings are recovering and valuation is now less demanding after the underperformance last year. Nifty has found decent support around 25,000 level after the correction this year, and we're expecting it to test the 26,400 resistance in the latter part of the first quarter this year. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.